Yes, I don't think I will ever forget that day. So my sister referred me to you, and thanks, Steve. And so when I called, I had all intentions of filing for bankruptcy. Um, 2014, December 2014, I lost my mom. And after that, I fell into a depression. And with that, I just didn't care about paying bills on time. Everything was just.
Well, what's up, everybody? It's your girl here, Breanna Colón. Thank you so much for joining me again for another podcast episode. Today, I am meeting with another couple that is a part of the Integrity Financial family, Elvin and Delisa. Can y'all just say hello to the people?
Hey.
So happy to have you. For those that are watching on YouTube, thank you so much for tuning in. For those that are listening by way of podcast, thank you also. Today, we're going to be talking about things that happen when you're married and how to navigate the finances when you're getting married and all of those kinds of things. So you are definitely going to want to listen in and hear what they have to say and what I have to say about these particular topics. So let's just get started. Now, when I started working with them, I actually started working with Delisa, which was before she got married. And this was 2016. So it's been about 7 years ago that she initially reached out to me about wanting some help with her finances. And at the time, she was going through a lot, and she thought that she needed to file for bankruptcy at the time. And so she called, and, I'm gonna let you tell that story of how you felt that particular day, if you recall, kind of where you were in your headspace about your finances at the time.
Oh, yes. I don't think I will ever forget that day. So my sister referred me to you, and thanks, Steve. And so when I called, I had all intentions of filing for bankruptcy. 2014, December 2014, I lost my mom. And after that, I fell into a depression. And with that, I just didn't care about paying bills on time. Everything was just kind of lapsing all over the place. And after going through grief counseling, you come out of the fog and you start to come to, and then all of a sudden you're seeing all these bills and things pile up. And I look and I'm like, oh my goodness, how did I get here?
Yeah.
I'm so far behind, and this and this and this. And then having unfortunate medical problems, mostly panic attacks and things like that. The ER bills rack up too. So when I came to you, I said, okay, how can I file for bankruptcy? That was my question.
Yep.
How can I file for bankruptcy? Because I could not see another way out at that time, because I had I think it was about 10 bills from different collectors wanting their money. And I was just so far in debt, and I could not see the end game outside of filing for bankruptcy. That's what most people tell you anyway.
Right.
Go ahead and file for bankruptcy. You get a clean slate.
Right.
Okay, fine.
Yeah. Like it's not a big deal. It's a very big deal.
It wasn't a big deal.
Because it carries with you. You're carrying that thing, everywhere you go. They're asking, and you got to keep explaining for 7+ years.
That's right.
What happened? Oh, well, that was 5 years ago. Okay, well, what happened?
Yeah, that's right. So thankfully, when I came to work with you, you taught me I had to trust the process, basically, and that I didn't have to file bankruptcy. Now, at that time, I was like, okay, she says this, and I know she's good at what she does, because my sister would not refer me to somebody who did not know what they were doing. But I have to admit, in that moment, I was like, I don't see what she's saying. But
I remember you being hesitant, like, okay, if you say so, I'm gonna give it a shot, but I don't know.
I was hesitant. I said, this is a big risk. And I was just so anxious about the whole thing, because it was unknown territory for me. I had never gotten to this place of being so far behind in bills and my credit score was so low. It was 450. That was my credit score. So I couldn't even apply for a card if I wanted to, or anything. But thankfully, trusting the process, doing exactly what you telling me. Well, not always exactly, but there were moments in the beginning I was like, I'm not doing that. But no, eventually doing what you told me to do. And within 2 years, I think we got those bills down to 5 collectors, I believe it was, and the others were paid off. My credit score went up, I think 150 points within those first 2 years.
Come on, Jesus. Now we're not gonna gloss over that right there now. 100 and what? 150
points. 150 points.
I wish I had some shout music in the background. You know? Oh my goodness. Wow. We should have had the keyboard set up so Elva could just play some, some shout music in the back, Wow, that is amazing.
It was, and it is. It's a wonderful testimony and story. But the thing that I value the most is that you helped to teach me long-term solutions with budgeting and finance and things that I can carry over. Yes, it helped in the short term to pay those bills off and all of that, but you helped me with the long term of, okay, how do we budget this? How do I do this? And because my parents, well, I guess we'll get into that later. My parents, they taught me some things, but I didn't know how to budget. I really didn't like budgeting. I'm like, if I have it, I'm gonna spend it. If I have the limit on my card, I'm gonna spend that too.
Right. So when you were growing up, did you have any boundaries as far as spending is concerned? You got money for birthday, or did you have personal allowance? An allowance or anything growing up?
I did. I would get an allowance, and my mother would always say, "Okay, remember to tithe." That was her most important thing. But after that, she would tell me to save. And I used to be so good about saving. And then when I got out in the working world and I saw I could get things for myself, I was in the store shopping and, I'm going to get this, going on trips and things and just figuring it out as I go. Yeah, loving life, figuring out as I go. And then I got this nice thing called a credit card when I was 19.
Ooh, I got that testimony too.
So the credit card company came to our campus at college and they were like, okay, sign up. Of course, we're all signing up. We're new.
Right.
We have no established credit. Yeah. And they advertise it as, this will help establish credit and you can get this limit and that. So, of course.
Did you get anything free? Did they give you anything?
Probably so. It was something.
I was about to say that you got shortchanged if you didn't get nothing free because my campus they were like, "Hey, sign up for this and you get a free mug," and I'm like, "Okay." Everything they offered me, I'm like, "Okay," and I signed up, and before I knew it, I had 7 credit cards. 7, yeah. And the same face that y'all are making right now is probably the same face that everybody's listening. It's probably like, "What you had?"
Oh wow,
7.
Yeah.
My parents didn't know because I was a musician. I was making my own money playing at church and choir directing and all of that. So I made my own money and I didn't know any better. So I just thought I was chilling. I thought I was doing something. I'm like you, in the store shopping. I'm buying my now husband. I was buying him stuff on my credit card. I thought I had it going on.
The world of credit.
Yeah. So you only got one. You only got one. So you got suckered in for one, and I
got another. Yeah. And I think the max I've had is 3. But my problem was maxing out the cards and then
I did that too.
Oh yeah.
I was paying them. I just paid the minimum, I would pay and then charge on it again, pay on it, charge on it again,
I only have to pay $25 or $10 or whatever it was. And then, let me pay this minimum and then keep spending.
Right.
Yeah. So my parents didn't teach me. They taught me what they knew, and they did their best. But I learned the hard way about revolving credit.
Yeah.
I learned the hard way about the interest on the APR, and how it's not fixed. It's variable, and they mean that.
Yeah.
So
very much so. Interest is real.
Interest is real.
And they tack it on, and they tack it on, and they tack it on.
With no shame.
Yeah.
Oh, and don't be late. Don't be a minute late with your payment.
Right?
Because
A minute is right.
Late fee. That late fee is real too. So
$39 late fee. I mean, it's not little bits, it's gas money charges. Right. It's up there. It's for real. So let me go back to when once we kind of got situated with, giving you a new budget. Our goal was we had to fit all of the bills in with the amount of money that you were making. Because that was part of the problem on why you were like, oh, I probably just need to file for bankruptcy and call it a day. And I'm like, no, we're going to make this stuff fit. So we ended up doing, I had the budget pulled up here. Let me see. I think I still have it open back from December. Yeah, I see where we had several collection accounts where we said we were going to pay them $10 a month, $11 a month. Now, just for the benefit of the listeners, I want you guys to know, for anyone that's listening or watching that has collection accounts, you have to have the upper hand when it comes to calling collection accounts, because their goal is to collect. And so they are going to try to get as much money out of you as they can, and they will make you feel like you're obligated to pay them $100, $200 a month, or whatever. And so I'm saying, don't get sucked into agreeing to a payment that you truly can't afford. You're agreeing to say, I'm gonna pay $100, and good and well, you ain't got no extra $100 to be paying them for this collection account. You need to be realistic about it, because they don't know your budget. You need your budget. You know your budget. And first of all, let's make sure you have a budget. Let's start there, because sometimes that's the first problem, is how are you going to negotiate and tell somebody what you can pay, and you don't really even have an idea of what your income is and what needs to go out from that income. So please know that when you call the collection agency, you need to already know before you call how much you can truly afford to pay, and you need to tell them that. Now, in Delisa's case, we already knew that they were not necessarily going to be agreeable to $10 and $11. They probably were going to have a little bit of a problem with saying, oh, that's fine. I know you owe us $300 or $400, but just pay us $10, baby. That's fine. That was not, I'm sure, how that phone call went. So I told Delisa what to say, and she made those phone calls. And if you recall any of that, I'll let you talk about that and tell us what that phone call was like to try to tell them you want to pay $10.
I did get a little pushback from a few. Some were open because they, like you said, they just want that money. They just want to collect. But I did get a little pushback with some, and I had to defer to you to assist in them agreeing. And it was a little back and forth, but eventually they agreed, because they want that money.
Right. Yeah. Like I said earlier, before we got on this podcast, I was like, do you want $10 or do you want $0? Which one do you want? So I did help her with negotiating some of those, but she also got really good with the negotiating too, because I remember one of your credit cards had gone to an attorney, and we had to negotiate that payment. And so that payment, I think was it $50 or $100?
It was $50.
And that one, at that time, I think you owed at least a few thousand on that, right?
$11,000.
Oh, $11,000.
$11,000.
$11,000. Did you hear that? $11,000 that she owed for this credit card that had gone to an attorney. That's how far behind it was, that, had gone to an attorney's office. And we basically told them she can pay $50. Take it or leave it, period. Period, as people would say sometimes. And they took it. They didn't want to, but they took it. And so with the collection accounts, I remember having you write letters to, because some of them were like, oh, we can't accept, we need at least $50. We need whatever. And so I had her write letters and just explain, this is what I'm able to pay now. I'm able to pay you $10 a month. And she paid that $10 faithfully until those accounts were paid off, or until she had enough money to negotiate a settlement, to pay off the debt completely.
Yes.
And they took it, even with the credit card situation with the lawyer. I remember you calling me and telling me that, or maybe it was in a session, I think you told me that the attorney's office, like the next year or something, was trying to get you to increase your payment.
Yes.
something like
Yeah.
that. And you were
And
like,
I had to tell them, I said, well, according to our agreement, we agreed that I would pay the 50 until I was able to pay more. Right
right,
now, I'm able to pay more. So
right,
you're still going to get the 50.
right. You were like, did I call you? If I didn't
Yeah.
call you, that must
Yeah.
mean I'm still gonna pay 50.
And I surely asked, I said, are you calling everyone with this? Because well, I thought you would appreciate this call. No,
No, I don't. Thank you so much. Have a nice day.
no. Well, so it ends up that the representative got replaced by someone else.
Mm-hmm.
And when I paid it off, they actually sent me a letter thanking me for handling this amicably. I
Okay.
said, oh, now that's nice.
Mm-hmm. Mm-hmm.
He sent me a
Yes.
letter.
That's what's up. That's what's up. Now, I
Mm-hmm.
will say that a lot of times with my clients, I see that when they start this journey of trying to get to a better space financially, blessings start coming, and I think it's just because they are being better stewards over what God has blessed them with. And I believe that that just leaves more room for blessings to flow and blessings to come. And if I recall correctly, correct me if I'm wrong, because it's been a while. You had someone that blessed you and paid part of your credit card off, right? Or paid a portion of the balance or something like that. You were
Yes.
blessed in that way. So I
Yeah,
mean, you just never know how the Lord is going to bless, which
that's
direction it's
true.
going to come from. I'm just
True.
saying, there's good things that come out of obedience, and
Yes.
obedience to the word of God, of being good stewards over our money. And so, I've had that several times where I had another lady that one of my older clients who someone just out of the blue decided to bless her and paid off her credit card.
Mm.
Someone from her church, wasn't even a family member. You know what I
Wow.
mean? So just, hey, the Lord is leading me to bless you. Da, 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 da. I mean,
Mhm.
it's just amazing. So I'm really, really happy and excited for you in that way that you were able to knock those out, because it was several of them. It's at least 5 or 6 of them that
Oh,
were in that $10 that $10 a month range. But you knocked it out. You did what you had to do,
yeah.
and some money's better than no money. That's
Yeah.
really the bottom line. And at that time, I did note also you had $200 in savings when we first started.
Yes.
$200 in savings, and your cell phone was over $300 a month. And that was
Oh.
just that's what I had written down, and that was just your phone. It wasn't like you had a phone, a tablet, a
Ooh.
watch. I don't even know how that happened, but it was over
Wow.
$300. I don't know.
Look,
um
and now my cell phone is $71 a month.
he just pat you on the shoulder, bless your heart.
He did.
Oh, that bless,
He did.
that bless your heart tap.
Yeah.
Look, I didn't even realize it was that
Hey, it was, keyword, it was. Hallelujah. Come
high.
on,
Hey.
Jesus. Yes. So and then you had so we had set a first goal at that time of $1,000. That was your first goal. So that's a good note for someone who is in that boat of, I don't have any money saved. I have $100 saved. I have dust coming out of my savings account because there's nothing there. Whatever the
Yeah.
case may be, you got to have a starting point. So start with $1,000 if you don't have money saved, or if you have less than 1,000. Let that be your first goal, to have a starting point and figure out. You got to know how much money you have left over every month to be able to put money in savings, and figure out a goal date. How many months will it take me? If I only have $100 that I can put aside for savings, then okay, it's going to take me 10 months to get $1,000. So you just need to be able to figure that out and make it a priority, because emergencies do not give you a heads up. You will probably hear me say that at least once in every episode, that you don't get the advance notice for an emergency. So it is important that you have an adequate savings, and don't get it twisted, because $1,000 is not adequate savings. It's just your starting point. You have to keep going from there. I was just talking to a client earlier today who said her supervisor has been warning them that a government shutdown might occur within the next month. And they basically were telling them, like, be prepared, be prepared financially just in case. So if a government shutdown were to happen tomorrow, for all of you that are watching or listening that are government workers. Are you prepared financially for this type of storm to be able to take care of those bills, especially since many of you make six-figure salaries? You know, do you have the $5,000 or $6,000 a month to be able to still pay the mortgage and the light bill and the car loan? I know I sound like I'm straight out of Georgia saying light bill. Electric bill. It's the light bill. But yeah, it's important that you really plan and prepare for all of those types of things, because you just never know what life is going to throw at you. And so this is why we save. Sometimes people take it really lightly because they figure they have time, or maybe because the last 10 years nothing major has happened, so it's not a big deal if I don't if I don't have a lot of savings. But let you lose your job one good time. I've had clients that have been out of work for 6 or 7 months, some for 3 months and 4 months, and they were not prepared financially, and some of them got evicted. Some people have lost houses, all kinds of stuff, all manner of foolishness that would not occur if people would prepare better financially. So how much should you have saved is a good question. And it really should be, like I said, the first goal is 1,000, but after that, you need to have an understanding of what does it take to run your house? How much does it take if I didn't have a job or no money coming in tomorrow? How much money do I need to pay everything that needs to be paid? And then you need to times that number by 12. Yes, I said 12. I'm going to say it again, 12, like the disciples, 12. So, and that sounds like a big number, but it's a number that you work up to. It can sound like, oh my gosh, if I have to do 12 months, that's like $80,000. That's like $50,000. Yes, it is. How much money do you make in a year? How much money is coming through your house in a year? If your take-home pay is $5,000 a month, that means you have $60,000 that is coming through your hands in a year. How much of that should you actually have in your savings account? A lot of it. 60,000 is a lot when you start looking at it on an annual basis, but so many people are so used to living paycheck to paycheck that we don't think about the fact that it's that much money that's actually touching our hands. All we can think about is, oh, next week I'll get another $2,000. Next week I'll have $3,000. So it seems like, a small amount, but we have been, many of us, especially in the DMV area, have been blessed with an abundance of money. So please make sure that you are doing your due diligence on adding to your savings in large quantity, and get used to having 30,000 in your savings account, 50,000, 80,000. Now, once you get to those type of numbers, now you do need to do some investing in short-term stuff so that you can, your money can still be working for you, even though it's your short-term emergency fund. But you do need to have that kind of money, especially if you're making 6 figures. You absolutely should have that kind of money in your savings account. So back to y'all. I know I had to side note and turn off on the street for a minute. Wanted to turn on that street for one hot minute. But anyway, so and I also noted, Delisa, that one of the other things that we did, at least we talked about, I don't remember if we actually did it. Maybe you remember. I had noted that I said that we could do a forbearance or deferment on the student loan at that time temporarily, so that we could buy some time for you to increase your income.
Yes.
Do you remember if we actually did that?
Yes.
Okay.
Yeah,
all right.
we
Yeah.
did.
Now, sometimes people are kind of like, oh my gosh, you advised her to not pay on her student loan. Well, everybody's situation is different. I don't automatically advise people to not pay their student loan or not pay a debt. But in her particular situation where money is tight and we're trying to free up money, and she has all these collection accounts and some of everything going on, it was necessary in that particular situation to defer the student loan temporarily so that we could free up cash. She was also looking for an increase in income. She was making some adjustments to her housing situation. So we were doing all kinds of adjustments and strategies in order to free up cash so that everything that needed to be paid would get paid, which has obviously occurred. So now I remember, let me see, when we first started, you were living in an apartment, I think, right?
Yes.
And then you eventually moved, right?
Yes.
You moved in with your sister?
I moved with my sister
Okay.
because by that time he and I had met
Mm-hmm.
and we were preparing for marriage. But
Okay.
of course, we weren't going to live together before getting married. But
Mm-hmm.
my lease was running out on my place. So
Mm-hmm.
I left there, moved in with my sister temporarily
Mm-hmm.
before we got married. And then
And that
after we
saved you
got
some
married,
money, right?
it did. It saved me a lot of money.
Right, right, right,
It
right.
saved me a lot of
Absolutely.
money.
Absolutely.
So, I mean, I paid my sister a little something, but it was nothing compared to my rent, my original rent. So,
Right. Of course. Of course. Of course. Yeah. But I mean, having that opportunity, temporarily, obviously freed up cash for you to, be able to do some other things. So, I'm sure that was definitely an added blessing.
yes, yes, it
Hmm.
was.
Yeah. So now shifting gears to, y'all met, y'all were dating, y'all were already friends for a long time, right? I believe is what you told me. Is that right?
So, so long and short of it, we went to undergrad together, but we didn't know each other.
Oh, okay.
And and once again, my sister, the plug, introduced us.
Such a good resource, isn't she?
She really is. She introduced us, and
Hmm.
then that was in 2013, and then we reconnected 4 years later after
Okay.
that.
Hmm.
And from then on, we just naturally and organically became friends. And then it grew into more than friends.
Hmm.
And then we got married in the middle of the pandemic in 2020.
Okay.
We made
All
it
right.
work.
I know that's right. I know that's right. Ain't they cute, y'all? Ain't they cute? They just as cute. I know the podcast people can't see y'all, but just know what just believe what I'm saying. They cute. so so Elvin, what was the money situation as far as like did you grow up learning anything about money? Um what has been your relationship with money growing up into adulthood?
I guess for me, my parents were really, they always said you should always have something. So they always believed in working and setting something aside, not spending it all.
Mhm.
And that's kind of how I was raised. So my story was kind of like the opposite of the Lisa story. So like my dad was adamant for me not to get a credit card in college.
Mhm.
So I'm thankful that he did that. So two
Yeah.
big things with him. He was adamant about me not getting a credit card while in college, and he was adamant about me not moving out until I could afford a house. He didn't want
Mhm.
me to be in an apartment. So those two big things I always thank them for
That's
because
good.
that really helped a whole lot. So then and grew up tithing as well.
Mhm.
So grew up with that. And then over the last few years, really kind of started buckling down. I have other friends as well. We all kind of discuss stuff and kind of push each other financially. So we were
That's good.
pushing each other for better, who had the higher score, friendly competition, who had the higher credit score, and who
Mhm.
had stuff saved up to do this and do that. And
Mhm.
so it was, like I said, a good friendly competition, pushing each other to be homeowners
Mhm.
and that type of thing and eliminate debt. So
That's a good
thank
friend right there now. That's
yeah,
that,
so
that's the kind of people you want to be around. The right that's the right circle of people. Like-minded people makes a difference. It really makes a difference.
absolutely. Yeah,
Mhm.
so that's kind of been my story. So thankfully, I didn't have any. Oh, another thing too, my mom was adamant about no student loans. So thankfully I got a scholarship.
Okay.
But she was like, and if you didn't get a scholarship, we're gonna figure out something where you didn't have any loans. So
Mhm.
so
Mhm.
thankfully, by the time I was finished with college, no credit card debt, no student loan debt. So only reason why I got a credit card was because when I first started looking for a house, they were like, "You have no history." So
Right.
they made me get a credit card just to start building history. So that's the only reason why I
Mhm.
got a credit card. So I didn't get my first credit card till 2006, and
Mhm.
yeah, so and was taught to pay it off each month. Had a couple tight moments here and there where I have a couple months where I had a little balance, but always had in the back of my mind like, okay, this is not going to be the permanent way.
Yeah.
Thankfully, so
Mhm.
yeah, that's always kind of been how I was taught and how I was raised. And like I said, last few years really been trying to learn with saving and investing and all that type of thing. So.
Mhm. That's good. That's very good. So when y'all were first getting married, first of all, so it seems like um this was a great connect for the two of you because opposites attract. And, you know, I've said this before in other platforms that opposites attract. I believe God was very intentional and he knew what he was doing and that opposites attract to create balance. And a lot of times couples don't recognize that. And because they don't recognize it for varying reasons, they end up, you know, having friction when it comes to the finances. But the truth of the matter is, in most couples, there is typically one person who is stronger at the financial aspect than the other. And that varies. There's no one set answer that it always has to be the husband or that it always has to be the wife. It just varies. It's whoever is good at it. You know, we're a team. There's no I in team. So if we are going to come together on the finances, who is better suited to manage the actual budget? It doesn't take away from the other spouse in terms of making decisions together. You still make your decisions together. We're just saying one person is the person that's doing the execution, that's, you know, paying out the bills and, you know, looking at it together, and is going to give us probably a stronger perspective just off of their knowledge of, hey, this is a way we could do it. What do you think? So there's a lot to be said for couples that can learn how to work together financially. I don't understand. I just did an interview. I was being interviewed for a podcast a couple of days ago. And one of the things we were talking about is how couples, how could you be okay with your spouse not being okay financially? Meaning, is it really okay for you to have the 800 credit score, but your spouse has a 450 credit score? Like, how are you okay with that? You know, or is it okay that you know, one spouse is filing for bankruptcy, but the other one is sitting over here with $20,000 in the bank, and the other spouse has no money in the bank, and they're like, well, that's your problem. You know what I mean? Like, real talk. That's the kind of thing that occurs, the type of disconnect. We've seen couples who one spouse will have money saved all this time, and the other spouse never knew it. You had that? I didn't know you had that much money in the bank. Didn't know. All this time, like, what? Are y'all married? For real? Are you sure? Let me see the marriage certificate. Y'all joking. You know, like, how do you work and operate in that way? To an extent, it's somewhat selfish if we just want to, for real, keep it 100, you know, to an extent. But really, it boils down to couples just not learning how to work together. So it becomes easier to just say, well, I'm going to just pay this and you pay that, and we'll just keep it simple. In their minds, that's keeping it simple. But is it really? It's not really, because again, one person is typically the spender and one person is typically the saver, is usually how it is. And so if that's the case, the saver needs the spender. I mean, the spender needs the saver to help them not spend as much, to create that balance. You know what I mean? So, and you want your spouse to win. You know, I was telling the lady I was doing the podcast with the other day, if I get $5,000 that comes into the house, we got $5,000. You know, it's not I get paid Friday. It's we will have another $2,000 on Friday. You know, you have to get used to that lingo of the taking out the I and saying the we. It's the same when it comes to families and their kids. You know, it's if you marry someone and they have a child, and I'm sure y'all can speak to this because y'all are a blended family. You know, when you marry someone and they have a child, you're marrying everything that comes with that person, which includes the child. It's not like, well, that's your daughter, that's your son, you know. But there are some people who have those type of attitudes coming into the marriage, which, how is that unity? You know, how is that two becoming one? And then we're talking about, obviously, if you want to do things God's way. You know, let's just be clear. You know, if you're doing it the world's way, you're going to do it all kinds of ways. And that's that, you know, do you. I'm not here to judge you. But if your goal and desire is to do it the way God intended and operate at God's best, then he said the two shall become one. And that means one with everything. We're one family. You know, we got one. We're one when it comes to our money, all of the above. How have you guys navigated since being married, you know, in terms of, with you, Elvin, having a daughter, and, you know, now you, Delisa, as a stepmom? Like, how did y'all decide that was going to be navigated as a married couple?
Well, I think initially, I mean, she kind of knew it was a package deal with me, so that
it is. That's the key word right there. Package deal. It's a package deal. You can't put it no more simple than that. It's a package deal. I'm sorry. Go ahead.
Okay. So we discussed, because obviously for me I couldn't if she says so, like, I don't want kids, then that would obviously be an issue because I have a daughter. So like,
right.
Yeah, so just had to discuss and try to look at how that would play out, and then we even did a meeting with us and my daughter's mom, tried to discuss some things and lay out some things, and also talked about, I think, in our counseling sessions as well. And so just to try to be prepared for it. But thankfully she came in with the attitude of loving my daughter like her own, so that was a big help. And then they
that's right.
Connected on different fronts, because sometimes I think my daughter talked to her more than like me or her mom about some stuff. So like yeah, so God really got to work that out to allow that connection to work that way.
Yeah. Well, thank you for sharing that, because I can tell you a lot of people probably, there are some, I'll say not a lot, but I'm sure there are some people who needed to hear that, who maybe struggle in that area of trying to figure out, like, okay, I really wish that this is the way that it would be, but maybe they don't know how to navigate that. But you brought up a good point about the fact that y'all talked about it in marriage counseling, about how to navigate that on the front end. And I wouldn't expect anything less from Delisa in terms of everything you said about how she has been, a mother figure to your daughter. I wouldn't expect anything less, knowing her personality. But I think it's a really big deal to understand, like you said, that it's a package situation, whether it's the wife that has kids coming into the marriage or the husband that has kids coming into the marriage. It has to be a unified front situation. And the fact that you said, okay, well, we had some discussion with your daughter's mom and made sure everybody was on the same page. Like, it sounds really simple, when you explain it that way, but honestly, not everybody makes it that simple. You know what I mean? So, I hope that this portion of the conversation kind of brings encouragement to some other families that are trying to work out the whole blended situation, because that affects things financially too. You have some parents who are paying child support, and now you're saying, oh, we're going to get married and we're going to put our finances together. Well, now that means that if my spouse has a child and he's paying child support, well, now that affects me, because now that means I'm paying child support because it's our money, and so there's a lot to embrace when it comes to financially and trying to navigate all of these things, even with the debts. When you guys got married, Delisa still had some debt. She still had some things to finish out. She was way far from where she started, but obviously still had a few more things. And one of the things that I remember you saying, when I met with both of you, you were talking about how we're focusing on the debt. We're going to knock out all of her debt and our debt and all of this stuff. Your approach was the same approach as she had about, this is now our daughter. And so I commend you as a husband, because again, not all spouses operate in that way. You're like, it's your debt. You need to take care of you need to pay your bills. You give me this amount for our joint account, but you pay this stuff over here. But y'all actually, took the right approach to say, well, we have this amount of debt and we're going to pay off this debt first. It's not like, I'm gonna pay off my debt and let her worry about her own. Like that's a really, really big deal. So I wanted to make sure I didn't gloss past that, because again, sometimes people need to hear that so they can get right.
That's right.
There's a phrase that say, get right, church, and let's go home. You got to get right. You got to get right. I'm churchy. I don't know what I can say. It's churchy. I'm sorry. Grew up in the church. I'm a PK, just is what it is. So right. So now, just kind of fast forwarding to where you guys are now, I just realized I haven't gone to a break. So let me do that right now. We're going to take a quick break, and when we come back, I'll kind of wrap things up talking about where you guys are now. We'll be right back. And we're back. If you're just tuning in, you have got to do a replay on this because it has been fantastic conversation today. We've been talking to Elvin and Delisa and just kind of talking about their financial journey and how I started with Delisa back in 2016 before she got married to Elvin. And we had kind of just gotten into the time since they've been married and how they've been navigating as a blended family. Just really great conversation and good nuggets for those that have been listening. So again, if you are just tuning in, you'll definitely want to catch the replay. So I want to talk now about where you guys are now. I know I haven't worked with you in a good little while, but you've paid off some credit cards. You said, I think you told me you have no credit card debt, right?
No credit card debt.
Praise the Lord. Amen. Hallelujah. No credit card debt. I wish I had a sign for it. No credit card debt. That's very, very good. And I know, I think you said y'all have paid off one of your cars. You ended up having to get a new car, but I will say, Delisa, I have to applaud her because her car was old. Let's just keep it real. It was old. How old was the car? What year was it?
It was a 2000. Was it 13? Was it 13?
Was it early?
My mom's car was a 2007. 2007.
Okay, 2007. Yes, exactly. It's pretty old, but I have to give you applause for that.
Old car.
Yes.
Old
so yeah, old faithful. 2007, and we are in 2023. So your car did its time more above and beyond. Yeah. How many miles did you have on it?
160 something thousand.
That's still really good though. 160,000 miles, considering it was a 2007. Like I expected you to say well over 200. You know.
Well, because it was my mom's car first. She didn't put a lot of miles on the car. And then when I inherited the car, that's where the most of the mileage came from toward the end.
Right. I got you. But I'm just saying in general, you know, so many people would not have kept a car that long, you know, and would have traded it in and been like, oh, well, I'm going to get me a car. I'm going to get the car I want and this kind of thing. So the fact that you were willing to keep driving it and that not be a priority to you to have the latest fashion in cars, you know, is a big deal. It really is. It's a big deal. Because, you know, here in the good old US of A, we are a very fashion and flash driven type of country, you know what I mean? And so it's easy, and especially in the African American community, you know, we are quick to want to have our fancy car to go with our nails and hair and feet and everything else. You know, everything got to be all lined up. We got to have the house and the car and everything. So it's a really, really big deal. But the point is, after you guys got married, you had one car loan, which was Elvin's, and then y'all paid that off. And then you got the new car after that. Now, what did you end up buying? What year? Is it a new car?
It's used, but it's newer.
Right. Right.
This is a 2018 Altima.
Okay, that's good. Yeah. That's good. So you and how many miles did this car have on it when you bought it?
62,000.
Just under 60, I think.
Maybe 60,000 miles.
Gotcha.
Around there.
Okay, and because you have money saved, you were able to put some money down, as I understand it. So that's very good. You know, I know that again, this is things that sound really simple, and to some who have their finances together, they're probably like, well, yeah, you're supposed to put money down and da. But you know, there's so many more people who don't save properly to be able to put money down on a card. So again, that's why I'm, you know, kind of double clicking on this scenario of having money to put down, because it is a big deal. And as we were just talking about earlier, I was explaining that when you're trying to figure out how much money to put down on a car, it's important to consider all of the costs involved in acquiring the car. How much is it going to cost for this warranty that you want? Are you planning to get a gap coverage insurance? You know, how much is that going to cost? Tax, tag, and title. All of these things are things that if you're going to get them, you need to be prepared to pay for them out of your pocket. If you choose not to and you finance them because you wanted to have a comfortable payment, the payment fit where you thought it should fit, and that was the most important thing, you have just now agreed to pay interest on your insurance, on your warranty. You've agreed to pay interest on gap coverage. And you've also agreed to further depreciate your car before even leaving the lot. So those are things to consider, because we are so used to doing things a certain way that sometimes we don't think outside the box. And so I'm challenging those that are listening and watching to think outside the box of, when you are looking to purchase a car, I want you to think beyond just the car payment. And I want you to really take a close look as what is the true cost of this financial decision of me buying this car. Now, I will say, I love what Elvin and Delisa told me earlier, that they've already planned that they are going to have this car paid off in 3 years. So they not only bought the car, put money down, but also had a financial plan in place to say, all right, we're not going to keep this car loan forever. That's what we're not going to do. We're going to make sure we pay this puppy off in a timely fashion. And who's to say they might even exceed their own expectation of, of saying, yeah, we want to pay it off in 3 years. Who's to say they might get it done in 2.5? You just never know. And so it's important to have a plan for paying off your car and not get too comfortable with just, I'm gonna pay this car note for the next 60 months. There's interest you're paying. You're giving away extra money. If the car costs $30,000, you're paying about $35,000 by the time you finish paying for it. If you make all of the payments all the way through, it's crazy. It's crazy. So anyway, what's in the future for the two of you? Like, what's the plan now at this stage? Y'all have been married now for how long?
3 years.
Oh, 3 years for the Father, Son, and the Holy Ghost. Hallelujah. 3 years. That's all right. Oh, okay. Come on, husband. 3 years, 2 months, and 5 days. Let's get it all the way right. That's right. That sounds like a happy marriage to me. So what's the plans in y'all's future? I mean, do y'all plan to, I know y'all obviously want to retire at some point in time. Have y'all talked about, like, we want to, like, some couples decide they want to retire and move south. Some couples decide they want to go and live on an island. Some couples decide, we in the house we gonna be in, and this is it. This is the forever home. Like, what's in y'all's future?
I love all that you just said right there.
I was going to say, she had her choice, we'd be on the island, but for reality, we had looked at possibility of moving into a bigger home, but with just the status of the housing market, we've been holding steady. But thankfully, our area is still steadily increasing in terms of the
value.
Prices. So for our current home, that's good, because we're the values and increase. So it's
right.
I keep monitoring that. I subscribe so I can monitor the monthly rates and what's changing. So I keep watching on that.
So that's been a good thing to see. But so right now, staying put, trying to keep building up the savings. We're working to also start doing a vacation savings as well.
Did you see the look on her face? That was a really big smile on that one. She was like, yes, vacation savings. Yes, that's good. That's real good. That's real good.
Great numbers to that. There you go. Keep that real. That's right.
Well, I think that's important. I mean, everybody can't start with a vacation savings, or let me say, shouldn't. You can, but not everybody should necessarily start with having all these different multiple buckets of savings, because especially if you have a lot of debt, or like in Delisa's case, when she first started, there's no way I was going to tell her, girl, go and put you aside a savings for emergency, a savings for travel, a savings for home improvement. No, you don't get to have all them buckets, because we got to get this debt under control right now. But once you have gotten to a place where you've, taken care of some things and you have adequate disposable income left over, then you have the room to say, hey, you know what, let's go ahead and, we know we want to travel. We know we're going to travel. That's a known thing. So let's not act like, we don't know that we need to set aside for this. So I think that's really great that y'all have kind of, come to that conclusion that it's time to do that. so that you can travel and travel well.
That's right.
And on a budget. And on a budget.
And on a budget. That's right.
On a budget. On a budget. So on that note, I'm going to go ahead and wrap up. But thank you, Delisa and Elvin, for taking the time and your willingness to come and hang out with me tonight on the podcast.
Yes, thank you for having us.
Yes, absolutely. Absolutely. Thank you guys for watching. Until next time, be blessed. Bye-bye.